the Indonesian Australian Digital Forum, and I'm here joined by Simon Cant, who is founder and CEO. CEO?
Well, we're partners.
You're partners.
Danny and I are partners at Reinventure, both co-founders, both partners. We've recently brought on Cara as a partner as well, right. Cara Frederick.
Okay, so Westpac Reinventure is the fund, I guess.
Yeah. Yeah. Well, Reinventure. It's a corporate venture fund. Westpac backed it. Slightly different from your average corporate venture fund in that a lot of corporate venture funds, they basically have to make a decision inside the corporation about whether or not to invest. We're set up explicitly as a separate arm, and it means that for investments, particularly under $1 million, we can make a call and decide to make an investment quickly. The other key difference, I guess, is that the structure of our fund means that we're aligned with the entrepreneurs. We're set up as a traditional VC, and our compensation is all based on how well does the startup do.
Right.
So, different from some corporate venture funds, and it really enables us to go hard as a VC, as a pure VC, trying to ensure that great Australian entrepreneurs are getting funding and succeeding.
Right, so getting funding is a challenge, and I think certainly my experience in the Australian market is that a lot of the investors understand mining. I mean, we're getting better at it. There's no doubt about it. But they understand mining, but they don't necessarily understand high growth tech sort of style companies.
Yeah, look, I think that's changing. I mean, I think there's a lot of informal information moving around in younger people.
Yep.
There's also a whole lot of people. So, for example, tech innovation tends to go in waves. Okay, so we had a big media wave of innovation or disruption, I should say, back in 2000, when we had a big wave of retail disruption in sort of 2007, 2008, 2009.
Yep.
And these things sort of, they have a big impact and then they continue to unfold slowly over time. Right. I mean, Amazon's been doing the long, slow disruption ever since 1990s, right? And there's still a chance that in a decade, actually it'll have a massive impact on retailers and so there's some long, slow disruptions and there's some fast ones. But there's also been these waves, and the most recent wave has probably been really around fintech. I think it's come later because fintech, financial services is complicated. But it's not just younger people who are now seeing that as an opportunity. There are a lot of, Australia's a big financial services market in many ways because the superannuation system that was set up in the 90s meant that we've got this massive wealth pool within Australia, fifth largest wealth pool on the planet, which is ridiculous given the size of our country.
Really?
And because of that, we have a whole bunch of people who've been in finance for the last 2 decades, right? Particularly the last 2 decades. So there's a whole generation of people who just got sucked into finance because there was so much wealth to manage. Now, a lot of them are seeing the disruption and they're saying, actually, you know what, I can see how things could be done better. And so this whole wave of innovation is giving people who know the finance industry well, know where the issues are, know how things could be operating differently in a digital environment, and they're stepping out and going, I'm going to take a risk and do it myself.
Right.
So lots of opportunity.
Lots of opportunity. But so obviously Westpac a partner with you.
Yeah, absolutely. They're a funder, absolutely.
They're a funder and a partner.
And I should say they are a key partner. So, yes, we have that independence, but we also have a deep relationship with them that means in the right situation we can bring Westpac resources to bear beyond just the money from the fund. And that's when it really gets powerful. Now, there are some cases where that works easily. There's some cases where it's harder, but where we've seen it work, it really can be quite powerful.
So I think that's a really interesting point because a lot of early stage companies I talk to, they say, "Oh, all I need is money," and I spend a bit of time with them and have a look at it and say, actually, money's not going to solve the problem. A partnership like bringing in, and it's not just the money; it's smart money, and it's the type of investment or partnership or money that you bring in.
Yeah, absolutely. The people that you bring as an investor or as investors, I guess it does matter. I think it's worth bearing in mind that not every startup actually needs investment, and particularly not every startup needs VC, right? So some startups are going to be great small to medium-sized businesses, and people shouldn't go and raise capital just because that's what everyone else is doing. Because the reality is, every time you raise capital, you give part of your company away.
Right.
And if you don't have to do that, you shouldn't. Right?
Okay, right, excellent. That's a very good message. Right?
Exactly.
Yeah.
So, but for those companies that have the capacity to do rapid growth, then VC may be more appropriate. Now, even in that rapid growth space, there are probably two kinds of startups or high growth startups that we see. So there are some that are going after a kind of global niche in the whole kind of digital tech stack, right? The global digital tech stack. And they'll see a niche that's not being done well and they'll say, I can go and fill that. And you get businesses that are doing that. A lot of businesses have done really well out of Australia, filling an awesome niche, like Atlassian, like Campaign Monitor, all these sorts of companies. Now, some of them, they don't need that much VC along the way either. So Atlassian, I don't think needed it, right? And Campaign Monitor did get some funding, but it was quite late in their journey.
Yeah.
So even with some of those high growth startups, it's important to be capital efficient and to, again, not just raise it because that's what everyone else is doing.
The badge of honour, how much I raised,
that's
is
right.
How successful I am.
That's right. Those that tend to go and need to raise a lot of capital are those that are going after a really big network effect.
Yes.
Like when you're creating a big marketplace. So, for example, the big classifieds in Australia. There was only going to be really one winner in most of those classified spaces. And to be that winner, actually you have to throw a bunch of capital after it because it's a race. Right? And you really see that big wads of capital being thrown around in some of these big global marketplaces. Right? So Uber versus, Lyft and all of those companies. It's absolutely a battle of who can throw the most resources at it, who can throw the most capital at it, because it's a winner-takes-all market generally.
It's
same with Deliveroo and Foodora, right? And Uber Eats. Like all of these companies, it's a race to see who can be dominant in that space. And they are massive capital gains, I should say.
Yes.
But most businesses are not like that, and most businesses in Australia don't need that sort of capital.
Yeah, so I think that's a really good point. But there's an economist, W. Brian Arthur, who wrote an article for Harvard Business Review in 1996. I'm not aware of him.
I know Brian Arthur. Well, I don't know him personally, but I know him.
Right? And he wrote in 1996, "Increasing Returns in the New Order of Business." Exactly talking about that. He's saying it's a high stakes game in this increasing returns environment, and that is that if you want to play in that rideshare space with Uber, you need billions of dollars to play.
Yes.
And I talk to a lot of startups, or early stage companies that say, "Oh, we're going to go into this space, and we've got $500,000."
Yes.
But they're not going to play at the table with that amount of money.
No.
So, from your perspective, are you looking purely at fintech type businesses, or are you no?
No, we're not. I mean, we're looking at anything. You see, what we see in financial services is that the whole market is being reconfigured, right? So. Previously, banks have had a privileged relationship. To date, banks have had a privileged relationship with the customer, and the way they work economically, their sort of moat, if you like, is they have a trusted relationship with the customer around finance, and they can sell them all sorts of different financial products. Now, the whole digital kind of transformation is reconfiguring how people engage with financial services as it did with other things. And what it's tending to mean is that financial services is now just one of those things that's available when you need it.
Yes.
Do you know what I mean?
Yeah.
So I'm in a shop, I buy something, actually I don't have the money for this, I need a loan right now. I don't need to think about a loan, I need it right now, right? So suddenly the loan is there as I need it, as I'm making that choice. Similarly, if I'm buying a product, I might buy a product. The time to ask me if I might need to insure that product is probably right now, right? So financial services, we call it financial services, is kind of moving to the edge. So it's moving to the moment when people need it.
Yes.
And when that's the case, being able to be the company that is got a right to sell people financial services is about being the company that's there when they're going through that process.
Right.
So a lot of these consumer platforms are starting to become financial services companies, among other things.
Right.
And you see that particularly in China. So you see companies like Alibaba, it's a big consumer platform. WeChat, a big consumer platform. Now, for them, they see financial services just an awesome additional revenue stream. an awesome additional product or service that they can offer to their customers to improve the experience at the point of transaction.
Right.
And they're there at the point of transaction.
Right.
So this whole dynamic is reconfiguring.
Yeah.
So there are some of these marketplaces in Australia, some are global, like things like Facebook, but some are more regional. So for example, we've made some investments in some real estate platforms, which are, so a company like Open Agent, which helps people find the ideal real estate agent. Now, that's there at the point where they're thinking about their house and their property, and financial services becomes relevant there, right? So even things like Hey You, when people are going to buy coffee, it starts to be, they're making choices there.
So one of my favourite things is we don't need another coffee app. One of the things we've found over the last couple of days interviewing a lot of startups here is that they're solving hashtag problems worth solving.
Yes.
In fact, there was one company we met, I'll find the name, but there's 800,000 people in Indonesia that don't have bank accounts. They don't actually have a bank account, or is it more than that?
It's more than that. I think there's, I think it's something like
it could be
80 million who
don't have, right.
80 million,
80 million,
yes.
right. 80
yes.
million don't have bank accounts.
Yes.
And then come up with a way to sort of create a bank account through a mobile app.
I think it's like 36% actually do have a bank account. And you're talking about a country of in the order of 200 million people.
255 million people.
Yeah, so I think it's actually that many who do have a bank account and the rest don't.
Right,
So it's a massive unbanked population.
Right.
Yeah, so I mean, that is a huge opportunity. And I think one of the other things that Australians need to be thinking about with financial services is, Australia is well banked, right? Pretty much everybody who is of age can have a relationship and probably does have a relationship with a bank.
Yeah.
Now, that doesn't mean that everyone who needs support at the key time is getting it. There's definitely opportunities there, but relative to a country like Indonesia, it's much more around the edges. Yeah. But in a country like Indonesia, you're talking about a largely cash economy. Most transactions still being done with cash. Now, what we saw in China, where the same used to be true, and I'll give you a bit of a sense of how you can think about that. In China, I think there were around about sort of 11 terminals per 10 to 11 terminals per 1,000 people in China. Until even, I think that's actually about the number today, payment terminals. And then when you go to Western countries like Australia, US, it was more like 30 to 50. Right. Now, what that created was this environment where a payments service like Alipay or WeChat Pay was kind of desperately needed. Because cash isn't easy, and something like that really makes it a better experience. Now in Australia we have a pretty good experience because payments terminals are ubiquitous, everybody has cards, we've got tap and go, and that's awesome. But what we've seen is that China has kind of leapfrogged the US and Australia in mobile payments. So there's now kind of 50x mobile payments done in China relative to the US. And that leapfrogging is one of the Achilles heels of countries that have a really strong financial system. It's already pretty good. And when something's pretty good, you don't need to jump to the next step in the same way that a country like China needs a whole new revolution, right? And so I think when we think about what the opportunity is in Indonesia, same sort of thing is true. It's a largely cash economy. It's going to leapfrog to a mobile payments economy, a mobile-driven economy. And it's a massive country, and it's going to be a huge financial driver within this country. Probably a huge source of economic growth, and I think as a kind of close neighbour of Indonesia, Australia, particularly with our massive capital pools, need to be thinking about what a powerful partner Indonesia could be as a source of economic growth.
So just in wrapping up, you're obviously attending this event. What do you hope to get out of this? Is this just to sort of look for opportunities, or is it to get more informed about the market? What do you hope to get out of it?
I think we understand that these financial services reconfigurations or disruptions are likely to be global. So we understand we need to be here and understand what's going on, what's coming out of these markets.
And are you excited by what you've seen?
Yeah, we are.
I'm blown away.
It's heady, yeah. It's crazy. It's crazy. You get these companies that have come out of nowhere that now have 40, 50 million customers. Now, remembering that's twice the population of Australia, right?
Yeah.
So, you know, companies like GoCheck and
we spoke to
things like that.
one of the early founders of Go.
Rama?
Yes.
Yeah.
Yesterday. And we got a video interview with him, and
Yeah.
you know, I mean, that's just the sheer
scale of what these guys are doing.
The scale of what it is amazing.
It's phenomenal.
I will have to connect you with Sarah from, and I just can't think of the name of it, but she's doing this mobile payments thing.
Awesome.
You know, she's an awesome person. Comes from the Fin Services. Jumped off the precipice and said, "I'm in this. I'm going to try and solve this problem."
Yeah, great.
So I'll hook you up with her.
Awesome.
Simon, it's been a pleasure speaking with you.
Pleasure
All
speaking
the
with
best.
you too.
And keep watching Facebook at Facebook Live. And look us up on YouTube, Beach City. Simon Cant from Westpac Green Venture will tag and put some comments. And if you want to go and put your link to your page,
Awesome.
People can contact you.
Awesome.
Thanks, mate.
Cheers, mate.
Cheers.
Bye.